U.S. government shutdown, but employees are called back just for the CPI? The U.S. government is shut down, yet officials are calling workers back for overtime? What's really going on here? This strange move might just be the biggest focus for markets this week. It could decide not only whether the Fed cuts rates, but also how your investments perform. Hi everyone, this is Ultima Markets. Recently, the U.S. government shut down again because Congress couldn't agree on the budget. Normally, departments like the Bureau of Labor Statistics would have to stop work, and key economic reports, like the non-farm payrolls and CPI inflation data, would all be put on hold. But here's the twist: the White House suddenly ordered the BLS to recall staff, insisting that the September CPI data must be released. Although the release date has been postponed from October 15th to October 24th, at least it will still be out before the Fed's meeting at the end of the month. So, why the rush for this one report? First of all, it's directly tied to the wallets of tens of millions of retirees. Every year, U.S. Social Security payments are adjusted based on third-quarter CPI data. If the report doesn't come out, the government can't finalize next year's payout levels, a big problem. But more importantly, this CPI report is the Fed's final test before deciding whether to cut interest rates. The Fed has two main goals: maintain employment and control inflation. Right now, most of the market expects the Fed to start cutting rates soon to boost the economy, but whether they do, and by how much, depends on what this inflation report shows. If CPI remains high, the Fed will likely hold off. But if it shows inflation easing, then the door to rate cuts will fully open. In other words, this CPI report is the confidence booster the Fed needs before making its next move. At the moment, the market expects that as long as inflation doesn't come in too strong, the Fed will cut rates within the year. Such risk-preventive easing would be a major boost for risk assets, especially U.S. stocks. Think about it: rate cuts mean more liquidity and lower borrowing costs. Companies can invest more, and investors become more willing to buy equities. So, under this growing rate cut trade narrative, stocks may look more attractive than bonds. That's why this Friday's CPI report isn't just another data release. It could be the key turning point for the Fed's next move and the tone of global markets in the weeks ahead. So, what do you think about this CPI report? How big of an impact will it have? Share your thoughts in the comments below. This is Ultima Markets. See you in the next update.